Hello, I'm so glad to see you again. Welcome back to this week's episode of Closed by Mo. My name is Mohammed. You can call me Mo. I'm hopefully your favorite YouTube host on most things real estate. I'm also a real estate investor and a broker based out of New York City. And in this week's episode, we're going to talk a little bit more about the different tax advantages and implications of buying your first property as a first-time home buyer. So without further ado, let's jump right into this. Now, as a first-time home buyer, I have totally been there. I know how nerve-wracking it is, especially when you start to pay for things like the appraisal or sign away your earnest money deposit, even before you've come to the closing table. I know how absolutely nerve-wracking it is, but rest assured, if hundreds and thousands and if millions of people can do it in America where they become homeowners, you can do it too. A lot of times with first-time home buyers, I've noticed is you'll get so hung up on the immediate short-term cost of owning a home that you won't necessarily take a step back and look at all the different advantages. The key advantage here as a first-time home buyer or owner of any real estate are the tax benefits that come along with owning any kind of real estate, especially if you're owning your own primary residence. Now, the focus of this video will be the tax advantages of owning your own primary residence. I'm not going to get into the tax advantages of investing and flipping and buying and then selling real estate because I could go on and about that. However, because a lot of my clients that I end up working with are first-time home buyers, I figured it's about time to make a video about it. Now, the first and probably one of the biggest things when it comes down to the tax advantages of owning your own real estate or owning your own primary residence is the fact that you're able to write off a lot of things. The first thing to start us off with is the interest write-off. Now, what I mean by this is, of course, assuming that you're not going to be buying your primary residence in all cash. If you are, good for you, God bless. Most people aren't that lucky. But if you are going to be using a mortgage, whether that's a 20% down or 5% or maybe even 0% down, you have to know that you can write off a big chunk of your mortgage interest. That's right. Every single year, the amount that you're paying in your mortgage that's being divided into your principal and your interest, you can write off a big chunk of the amount that you're paying towards your interest. I say big chunk and not the complete amount is because you have to speak with your CPA or your accountant to figure out exactly how much of that mortgage interest you can write off, because there are certain limits based on what your taxable income is. But that is a very big advantage, especially if, let's say, you're taxed at a higher income bracket, because by writing off your mortgage interest, you can bring down your taxable income bracket to hopefully help you save on the amount of taxes that you have to pay to Uncle Sam. Now, the second thing that you also get as an advantage of being a real estate owner, let alone a primary homeowner, is the fact that you can write off your property depreciation. So residential property, you're writing off or you're depreciating across almost 30 years, like 27 and a half years. So every single year, you're writing off a certain portion of the overall sales price for the depreciation, meaning you're bringing down your taxable income, which is really good, especially if you're someone that gets taxed at a high income bracket, because now you're writing off your mortgage interest and your property depreciation every single year to bring your taxable income lower and lower. It doesn't necessarily mean you're making less money. It just means that you're going to get taxed as if you're making a little bit of less money, right? The third thing that you can also write off is your mortgage buy-down discount points, right? So let's say you're at a high interest rate market, right? Let's say today, for example, mortgage rates are hovering anywhere from 7% to 8%. I'm not a loan officer, so definitely speak with your banker before verifying what I'm saying. But if you were to pay extra, as in if you were to buy down your mortgage interest rate from 8% to 2%, whatever it is, the amount that you're going to be paying upfront, that mortgage buy down amount, that is actually completely tax deductible, because that is technically interest that you're paying upfront. So it is an advantage that you have, assuming you're coming out with more cash upfront before the closing. Don't assume that that money is just, you're just burning it into the wind or you're throwing it into the water. You're still going to get some tax advantages from that. The other thing that you can also write off on your taxes when it comes down to filing your taxes is your real estate property tax. Now, I say this with a grain of salt. It doesn't mean that you get to write off all and every single cent of the property tax that you have to pay every single year, but you're able to write off a big chunk of that, depending again on how much your taxable income is, as well as what your tax limitations are, on area and county to county that you're also going to be at. One tax advantage that a lot of first-time home buyers also don't necessarily consider, because it's something that's like probably more along the line, more in the future, is the capital gains exclusion, which is a very fancy way of saying that you're not responsible for any taxes on the capital gains or the profits on your primary residence sale after you've lived there for a couple of years. So if you've lived there for 2 years and you're filing your taxes as a single person, you're not responsible for any capital gains on the first $250,000. And of course, if you're filing jointly, you're not responsible for capital gains on the first $500,000. Those figures could change, of course. The IRS tax code changes all the time, but as of 2023, those are the figures. I hope you guys enjoyed this video, because a lot of times first-time home buyers don't necessarily think about the tax advantages of owning your own primary residence. So I'm hoping that if you ask me questions like this, I'm able to send you this video to helpfully put things into perspective. With that, guys, I hope you guys enjoyed it. I'll see you guys next week. Bye-bye.